afternoon, everyone. My name is Coey Howe. I'm with Heritage Title Company, and we are so honored and pleased to have Brian Tanner, who is the VP of Public Policy at the Colorado Association of Realtors, joining us today. He's going to be reviewing a number, I think 9 bills that we were talking about. And for those of you that may not be familiar with RPAC, the Realtor Political Action Committee, please do get involved in being educated about what they do, as well as financial contributions. This is, for many of us, we are all homeowners, and this is hugely important to our homeownership rights. But they do so much hard work at the legal level in protecting all of us as homeowners and the real estate industry as a whole. So without further ado, I'd like to introduce Brian Tanner. We really appreciate you being here today, and we'll let you take it away.
Hey, Chloe, thank you for having me. And I apologize, again, I don't have a slide deck. So if you're looking for a slide deck, I'm going to kind of verbally go through some things out here. And again, the background in my room, I'm in Durango, Colorado right now, where it's 95 degrees. I have a very sparse decorated room. It's not glamorous, and the curtains are shut because it's 90 degrees here. And so trying to keep the room all nice and cool. So this is what you're going to be looking at. Hopefully I'll make it somewhat engaging over this time together, but really just want to share some background on our Colorado Association of Realtors team and who I am. And then also I'm going to provide some political context and strategy before getting into 2023 bills of note. Then I'm going to share what's happening now and what 2024 could look like. And I'll close with some time for questions. Now, look, I know we have the chat enabled. I would ask all of you, because we do have 75 folks on, to use it judiciously, please. I know, Chloe, you're going to monitor that as well. But as I'm kind of going through things, I'd love to get through sections. The section that I'm pretty sure is going to draw out some questions is the bills. And again, we mentioned that 9 number there. I'd like to get through all of those with snippets of information. And I'm sure for the Q&A, we can dive a little bit deeper in some of those bills, or bills that I haven't touched on pique your interest. So happy to share that our CAR government affairs team is fully staffed. We have a full-time team of 4, including me. As Chloe was just mentioning about RPAC, Carrie Ann Brinzel handles all things RPAC, which is our Realtor Political Action Committee. It takes resources to communicate where we stand on candidates and political issues. RPAC contributions or investments support our political and electoral efforts. Again, we've got a family of about 29,000 members across the state. Well, we've got 3.3 million registered voters. So it's about getting what we know and what members know out to a much larger universe as to where candidates are going to be and how they're going to impact business. Now, Carrie Ann is the most seasoned member of our team with just over 2 years at CAR. Now, Jesse Zamora is our government affairs associate who handles policy analysis and internal happenings for our team. So I'm going to oversimplify the buckets of our team here. Jesse's a lot of the stuff internally for some of our committees, some of our work, our congressional stuff out there. Now, Lauren Cecil is a newer addition, joining us in January from the Tennessee Realtors Association, and she serves as our government affairs director of external coalitions. Now, we're a part of about 15 different coalitions, and Lauren is our primary liaison between business groups and other associations. Leads to me, I'm the newest addition, replacing Liz Peets at CAR on February 27 and serving as our vice president of public policy. Very important to note, because I get asked this, or it's assumed sometimes, I am not a realtor. No one on our government affairs team is licensed for real estate. I do know the political process quite well and how to impact legislation affecting the work and lives of realtors, though. So for the previous 8 years, I've served the Colorado Education Association, most recently as their political director. Now, CEA is a statewide association of about 39,000 teachers and education support professionals. Now, I thought moving into helping people attain housing and protecting property rights would be a nice, quiet change from 8 years of public education battles. And boy, was I wrong. As the second day on the job, I had to deal with this little tiny bill about rent control that was before the legislature here. So that's House Bill 1115. Now, before that, I handled government affairs, communications, and special projects for a statewide association of classified state employees in various agencies, CDOT, corrections, human services, higher ed, CDPHA, you name it. Now, I've been a registered lobbyist in Colorado going on 15 years and was previously a lobbyist in Wisconsin. Now, I've worked in politics, and this sort of causes my chest to tighten is like I've been working in politics now for a quarter of a century in Colorado, Wisconsin, Massachusetts, and Oregon. Fun fact about me, so I hope you have pen and paper and are writing down fun facts about Brian, is that after college in Oregon with a degree in political science, it made sense at the time to go and get certified by the U.S. Forest Service to fight fires as a wildland firefighter. And for those of you who know Oregon, I was based out of a small town near Bend, Oregon, and fought fires for more than 6 months across Oregon, California, Idaho, Montana, and Wyoming out there. This truly prepared me for a life in politics. You know, I still use one standard fire order in my work today, and you might want to apply it to your work as well. And that fire order is be alert, keep calm, think clearly, act decisively, right? It's something we can all apply in our lives on a daily basis. Because it's a natural question living in our state, I am not a Colorado native. I was born and raised in Kansas, near Kansas City. However, I have 2 Colorado natives at home. I've got 2 daughters in elementary school. My wife, Lindsay, is a saint who runs our family and keeps things moving in the right direction when political chaos upends my life. Now, we live in Southeast Denver and saw a recent property valuation go up by more than $250,000, which happened, I think, quite a bit in terms of that shock value. And so that's me in a nutshell. All right, so now you know about me and my team a little bit more, hopefully. And before I get into what happened this year, I really need to go back to the 2020 census because it impacted what happened in 2023 and will impact future years. So I mentioned I'm not a native, and as we all know, there are several other transplants in our state along with native Coloradans. Liz probably mentioned this a year ago, but for context, it's worth revisiting. Our population currently is just under 6 million people, enough for us to gain a congressional seat from the last census. Now, following the census was redistricting, where all congressional and legislative district lines are redrawn. You might remember the redistricting commissions, maybe. It also sometimes leads to new district numbers, which is fun for most folks who don't live and breathe politics. So, voters put these new lines and districts to use last November during elections. And those 2022 elections yielded the following for the 2023 legislature. And again, as I don't have a slide deck to share with you all, if you are taking notes, I would encourage you to write down these numbers because they're pretty important, and I'll get to them multiple times here. In the Colorado House, you've got 46 Democrats and 19 Republicans. That is a supermajority. In the Colorado Senate, you've got 23 Democrats and 12 Republicans. That is 1 vote shy of a supermajority. Now, all 4 constitutional offices are held by Democrats, and we're sharing here of the 100 legislators currently serving in our General Assembly, not a single one of them is a realtor. Also important to note, the Colorado House could likely remain in Democratic control until at least 2032, when lines are redrawn after the 2030 census. That's not my gut. That's simply math based on redistricting commission data of previous election results. Now, the Colorado Senate should be more competitive, but math does show that Democrats should retain a 1-seat advantage based on past election results. This is our political reality. Based on party affiliation across our state, a third of you probably love these numbers. A third of you probably hate this, and a third of you are probably like, meh, whatever. Of our 3.3 million registered voters, the largest party affiliation block are actual voters who are unaffiliated or independent of a party out there. So this political composition in reality really affected how we approached bills for the Colorado Association of Realtors in 2023. There were 617 bills introduced in the legislature, and we tracked around 85 bills. So about 14% of the bills this session were something that was on our plate. Of those 85 bills, we took a position of amend on about a dozen bills, which is a historically high number for us. A couple of things to note about bill positions. Staff, including me, do not take positions on bills. CAR members decide our positions on bills through our Legislative Policy Committee, or what's commonly known as the LPC. So if you're unhappy with any position CAR takes on a bill, be a part of the solution by joining the LPC. And again, I can share a link out through whoever here about how to be applied. There's a link on our website at coloradorealtors.com in terms of applying for any committee, not just the LPC. Some of you might be asking yourself, or me later, what the heck is an amend position? So you all know what it means to support or oppose a bill. Those are clean, straightforward positions. Now, monitor is another position that basically means you're neutral on a bill, but it impacts you. So you're keeping track of it, because again, they can be amended and that amendment could change your monitor position. Amend basically means you're not okay with the bill as is, and that you're seeking changes, called amendments, to it. If you get the amendments you're seeking, you might change positions to be neutral in it or monitor it. You might like the changes enough to get you to a support position. And if you don't get the changes that you feel you need for our members, you might move to an opposed position on that. Really important to note here, there were definitely bills realtors really disliked, but rather than oppose, we had to take an amendment position for political reasons. It goes back to the math I shared earlier about party composition of the General Assembly. The State House has 46 Democrats and 19 Republicans. This means that the primary House committee that hears bills affecting housing, I'm going to lump them all into housing right now, has 9 Democrats and 4 Republicans. The magic number to make changes to a bill in committee or kill it is 7. Again, simple majority, 7-6 vote, 13 total. So if a bill has Democratic sponsors and you don't like it, if we don't like it, you would need 3 Democrats to break with their caucus and join all 4 Republicans to get to that magic number 7. Splitting a caucus like that in a committee is rare. Politics really is a team sport. So with that, we found we could make far better progress by being in an amend position and working with bill sponsors in a good faith effort to make changes to bills. Bills that we knew were moving and could become law, we looked to secure amendments to make some bills we really disliked at least workable, and the theme I think was palatable. And I'll share some bill examples shortly. The state Senate has a much closer committee composition, with most having 4 Democrats and 3 Republicans, so a bit more realistic to pull a Democrat to join Republicans, which again, I'll get to shortly on what happened to some key bills for us in 2023. So I'm going to spare you from covering the 85 bills in our bill tracker for this year, because even if I spent just 2 minutes on each bill, this section alone would be about 3 hours long, and you would all be fast asleep out there. But now that you've got some of the background, the context, the strategy behind this, I'm going to dive into a few of these and just let you know, again, snippets of information. We've got the chat, and we do have Q&A that we've got time carved out for here at the end. So we're going to cover about 9 bills. I picked out 9. Some of you may not care about. Some of you might. There might be others like not on this list that we can go through. But again, if you have a question, write it down. And again, I'm not looking at the chat. So if there's people in the chat right now, I'm trying to be focused in terms of getting this information out, and we can get to that later. The first one is House Bill 1115, which was called rent stabilization, better known as rent control. This is the one bill from the start that Carr opposed. It would have repealed a statewide prohibition on local governments from enacting rent control or local rent control ordinances out there. We actively oppose this bill as it would have a chilling effect on building new multifamily housing units and directly infringe on private property rights of housing providers. Now, we initiated 2 calls for actions that hopefully all of you receive and took part of this action, because these calls for action generated more than 9,000 member responses, along with a few key realtors testifying in committee against this bill out there. And I can't share that enough. There was a lot of testimony on this bill, a lot of personal stories from tenants about why this was needed. The fact that in some key districts, we were able to generate more than 200 local constituent responses makes a difference. So please, when you receive those calls for actions, it takes just a few minutes. It does count and makes a difference. This bill, as hopefully all of you are aware of, died in a Senate committee with 1 Democrat, Senator Dylan Roberts, who joined the Republicans to kill the bill on a 3-4 vote. Senator Roberts cited a realtor's testimony in his closing comments on why he was going to oppose the bill. So again, makes a huge difference there. The next bill is House Bill 1190, Affordable Housing First Right of Refusal. This bill would have allowed local governments the first right of refusal to purchase residential or mixed-use multifamily property before it could enter the market, as long as it was used for long-term affordable housing. So again, seeing that this bill had some legs and was moving, we actively amended this bill by adding a 5-year sunset. We kept hearing from local governments they needed another tool in their toolbox around affordable housing. We wanted to put a cap on that tool at 5 years, increasing a building's eligibility threshold of units to 15 for urban and 5 for rural. The initial numbers were much, much lower than that. I think it was 3 and 5, but don't quote me on that. We also added a building eligibility date to really only impact Class C buildings. So again, I didn't know this, but I found out that Class C and Class A and Class B are not actually defined in statute anywhere. But essentially we got to an age qualification. So these are for buildings 30 years and older that would be impacted by this bill. We also exempted out foreclosures, and we shortened the timeline for a deal to be closed. So those are all amendments that we fought for and secured out there. Now, this bill did pass the legislature, but Governor Polis vetoed the bill in early June, citing the impact on businesses out there. The next one is a bill that you may not think like, why, how did this end up on our plate? And I'll share why, because the title is House Bill 1192, Additional Protections in Consumer Code, CCPA. So we actively were trying to amend this bill because the introduced version jeopardized errors and omissions insurance by allowing potential claims to be reclassified as a deceptive trade practice, which E&O insurance does not cover. So Section 1 of House Bill 1182, which was really, there's a whole section around antitrust that didn't impact us at all, that the Attorney General's office really wanted, which was like the heart of the bill. Well, this section up front was something that was added in. So Section 1 of this bill removed the knowingly or recklessly mental state from the general unfair or deceptive trade practice provision, and it also redefined the word recklessly with regard to unfair deceptive trade practices. This change would have made it easier to sue realtors as possible Colorado Consumer Protection Act claims with treble damages, which is more in terms of exposure and damages, without E&O insurance coverage. So we actively advocated to remove this section from the bill, with General Counsel Scott Peterson testifying to the unnecessary harm it would create for realtors. And in partnership with other associations, not just us out in a vacuum, we successfully amended House Bill 1192 with one Democrat casting the deciding vote to pass this amendment on a 3-2 vote in a Senate committee out there. So that's 1192. All right, changing gears to a bill that we supported and championed right from the get-go, something that we initiated around consumer protection. This is Senate Bill 77, which is titled Restrictions on Broker Engagement Contracts, which might make some people a little bit nervous with that title. But really, Senate Bill 77 stops a practice from out-of-state brokerages. The company that came to light that was sort of the example was MV Realty out of Florida, who initiated exclusive right to sell agreements in exchange for kind of immediate or direct cash assistance to homeowners. Now, these broker engagement contracts were usually for about 40 years, binding current and future owners of that property as a recordable lien. So this is something that we actually had members who ran into and had to spend thousands for legal because they were being sued in court to honor these broker engagement contracts out there. So we were able to garner bipartisan support of this bill, with it passing the state Senate 32-3 and the state House 59-5. So again, we were ready to cut through some of the gridlock in the partisanship that we see around, I think, a really good sort of something that was around predatory practices and around consumer protection. Changing gears, Senate Bill 166, the Wildfire Resiliency Code Board. So there were a few bills related to how our state handles wildfires. Senate Bill 166 creates a Wildfire Resiliency Code Board that is charged with determining the wildland-urban interface, or WUI, boundary, and establishing resiliency code and standards for properties within the WUI. Now, we started in an amend position and eventually moved to monitor after ensuring property owners have sufficient time to meet any changes in code, especially as they relate to defensible space, and after identifying funding sources to help property owners on costs associated with mitigation for defensible space. We talked about this, we heard a lot from our folks that have quite a few maybe trees on their property, that if they have to remove some of these trees to meet these new codes, like this can get into the thousands of dollars quickly. So it is something that we're looking to assemble. And again, we have Colorado Project Wildfire that we help fund, and actually helps provide some of these resources as well. Sticking with the wildfire-related legislation, some insurers, you may have come across this, are pulling out of states with high wildfire risk. We're seeing this in California with multiple insurers. And some are, and again, not just California, we just heard about farmers leaving Florida for both hurricane and wildfire risk there as well. In our state, we are seeing some insurers non-renewing in certain Colorado zip codes. That is happening right now. So House Bill 1288 creates a statewide insurance pool of last resort for property owners. So about all the positions we can take in a bill, we've covered ones we've supported, opposed, amend. This is a bill that we've monitored to make sure that property owners can access insurance in high-risk areas, but also making sure that the private market or insurers remains the primary provider and not see this public option become a competitor, which is what happened in Florida. So Florida's had this on the books for a number of years. And again, it has become, I think, the predominant sort of insurers is this public option. But look, there are guardrails in this legislation to really truly keep it as a last resort. One is capping the coverage at $750,000 for residential property and requiring property owners to provide proof that they were denied coverage by an insurance company. People ask, well, who's paying for this? Well, House Bill 1288 is funded by a small percentage from each insurer who conducts business in Colorado. So that's one. And something that's coming online right now. So everyone should know that the FAIR board is being sort of assembled that's going to go into like actually the implementation of this program. Because again, premiums haven't been set yet. What does the coverage actually look like? These are all things that are coming in formation right now. So if there's questions around that, there's nothing definitive because it just got passed and signed into law just over a month ago. All right, Senate Bill 206, disclose radon information for residential property. This is one of those bills that we really disliked. I say we collectively, I don't know everybody, that the introduced version, and because, you know, I'll get to the fuzz, but it seemed to have legs. This is a bill that was supported from out of the gate from the American Lung Association, pediatricians, health groups, etc. So knowing that the support that it had behind it and knowing the political composition, we looked to amend it. So Senate Bill 206 requires disclosure around radon to renters and buyers of residential properties. And as introduced, you're going to love this piece, it mandated that the real estate broker to enforce seller compliance with disclosure and mitigation requirements. So the liability is not on the seller. The liability was going to be on the real estate broker to make sure that there was compliance with this bill. I think a lot of heads sort of popped off and were like, wait, what? The introduced version also required a separate printed document to buyers or renters with a warning statement similar to the federal requirement of lead paint. Essentially, they were copying and pasting what the lead paint sort of disclosure and dangers and wanted to do it for radon. PAR, in working with the Division of Real Estate, were able to amend this by removing the broker liability first out of the gate and incorporate danger disclosure within the contract to buy and sell. Rather than a standalone form. So this is an addition. You will see the bold print, all caps within the contract to buy and sell now around radon dangers. And adding more radon information to be disclosed on the property disclosure form. There remains a requirement for a buyer to be provided a copy of the most recent CDPHE brochure advising people about radon hazards in real estate. Senate Bill 206 did pass the legislature. And the governor did sign into law, but added a signing statement warning that this bill has widespread impact on the Division of Real Estate and related forms because it opens the door for other industries. Again, we talked about radon. You've got, again, asbestos, you've got mold, you've got all these other environmental hazards that are not like, wait, where's my carve out? So these other industries could be seeking their own carve outs, which may lead to the state stopping the creation of forms and forcing brokers to look at trade associations and attorneys around these pieces. So that is something that I think really, hopefully this will put a cap on it, end on it. But again, a lot of concern and consternation around Senate Bill 206. All right, a couple more bills, then we'll get into where are we headed here. So these last two are kind of big ones. I'm sure there'll be lots of questions too. Senate Bill 213, this is land use. This is one of the governor's priority in terms of like, how do we change our land use planning applications and zoning process to help incentivize, upzone, create density, utilize our space better, with a sort of a key component of like sort of overriding a lot of local control around essentially the permit process, zoning process, development process out there. So big components. This is a 100-page bill. Basically has a housing needs assessment that was detailed for a local, regional, statewide basis. The piece that was really interesting for us was there was a section around accessory dwelling units and ADUs about being a use by right and not allowing local governments or even HOAs to prohibit ADUs on properties. So this is a private property rights piece out there. As long as these ADUs, there were some exemptions. So if you were on a septic system, you couldn't just pop up an ADU. If this ADU was not going to be accessible for emergency services, you just couldn't put this out there. But again, something that would increase sort of stock and units out there. A lot of concerns in terms of the impact, but something that was interesting. The other piece around this was middle housing. So I live in a single family neighborhood. R1. And this would allow somebody to essentially come in and build up to, at the introduced version, was 6 units on a single lot. Now there's height restrictions in terms of aesthetics and everything else out there, but if you could meet the height and you could pop on 6 units, like that was the cap. So it's called middle housing. So middle housing was a huge sort of issue. It's hard for people to see past, and I'm going to just use the phrase like the NIMBY aspect of it. Like I can't imagine my neighbor just putting up a duplex, fourplex, sixplex right next to me. And the key thing around all of this stuff, there's no parking requirements. So for really almost every development, there's a parking requirement in terms of number of off-site or off-street parking spaces out there. Parking requirements were struck throughout this entire bill, except for there's still a requirement in terms of handicap parking spots requirements. The other sections were around density around what was called key corridors. So again, high transit sort of areas, and then transit-oriented areas as well, which is really geared towards RTD and light rail stations out there. So essentially wanted to put a certain number of density around, I think about don't quote me on this, but I want to say like a quarter-mile radius around certain transit-oriented areas, essentially like RTD light rail stations. Same thing for quarter mile on each side of key corridors out there. There's a whole bunch of sections on the back end of this bill, but those were the sort of big nuggets in terms of like really creating density rather than sort of sprawl. It was the whole argument behind that. Now, this bill went through a million different variations. I'm sure you all heard about it and read about it out there, but at the end of the day, this bill did not pass. And the reason why is because House Democrats and Senate Democrats could not reconcile their differences on this bill. So in the final hours of the last day of session, this bill just did not get anywhere. I'm just going to get into now the piece, at least for this bill will be coming back. And in fact, rather than having one big package, we're expecting probably smaller sections of it coming back that will be sort of stakeholdered a little bit better. The very last bill is kind of a nice segue because it was during session, but we're going to see it on the ballot in November out there. This is Senate Bill 303. This is the, essentially it's a property tax relief and voter approved revenue change. Senate Bill 303 will essentially become Proposition HH on the 2023 ballot. So this is something that for all of these sort of sections around, I'm going to share with you everything that's being proposed, like in the change around 303, which will be Prop HH, has to be voter approved, at least for the sections I'm going to share with you here shortly. I'm going to start with a really key component though. The Colorado Association of Realtors does not have a position on Prop HH. We are waiting for some legal challenges to work their way through. And we're also going to look at polling surrounding it before we make an informed decision. I say we again, members are going to decide this through our CARPAC committee. So CARPAC is the group that really will take a dive in terms of Proposition HH. All right. So the last couple of years, in the very final days of session, we have had property tax relief packages, like literally the last hours out there. Last year it was Senate Bill 238 that reduced the assessment rate and provided some actual value reduction out there. Well, this year for Prop HH, I'm going to give you the kind of the big sort of nuggets out there. One is that this is not just a 1-year kick the can. This is a 10-year timeout. So if voters approve, like the assessment rate, and this is where it gets really interesting, the assessment rate for an owner-occupied primary residence will be 6.7% for 2023. And in fact, it would be 6.7% for the life of this bill or Prop HH all the way to 2032. For this year, you would get an actual value reduction of $50,000, which again, we can all do the math here. A lot of our actual values went up by more than $50,000. So we're still going to be paying more in taxes unless your property value went up by less than $50,000. This is why it's being called property tax relief, and the word reduction is being very, very carefully applied because you're paying more in taxes. You're not paying as much more in taxes if Prop HH passes. So this thing also applies. Now, there's some good things in here. I definitely got to highlight because it's something that we have fought for years about the portability of the senior homestead exemption. So right now you've got this 10-year timeout. You're locked to a property for 10 years in terms of your senior homestead about this $100,000 sort of write-off. Well, for this is one is it increases. So again, 6.7% for a senior owner-occupied after a $50,000 reduction. But starting in 2025 for seniors out there, your assessment rate is going to be 6.7, just like everybody else out there, along with $140,000 reduction of actual value, and it's portable. So that's a kind of a key piece. Multifamily is the same as what I just shared with the owner occupied. The thing that's causing us heartburn, and we haven't really dove into it yet, is there's a new classification of property being created for this. It's called other residential. So I'll give you some of the background, and I'm sharing you what we heard about why this section was needed. Is you have people who own second and third homes in the state, and you also have people from out of state, from Texas and California, who have properties in Colorado. Why should they get the same sort of breaks in sort of the property tax relief that people in Colorado are getting out there? So that argument is like, we need this other thing around other residential, so that people who have second homes, it's not their primary residence, it's not their owner, it's not an owner occupied residence. For the first year, they would get the same reduction of $50,000 in actual reduction, 6.7% residential assessment rate. It's in 2025 where they would lose that actual value reduction. So the exact same assessment rate for all of these properties, multifamily, senior, owner occupied, 6.7% assessment rate. And again, you all know your own mills, so everyone can do the math in terms of mills, property, all of those things out there. But for the other residents, it would just be the assessment rate at 6.7 with no actual value reduction from 2025 all the way through 2032. There is another thing in here that we saw, there's a lot of heartburn. Politics causes lots of heartburn all the time, is that you would have to do an affidavit, very similar to the senior homestead. For right now, you've got to submit an affidavit to your assessor saying like, this is my primary property. All of us as homeowners, if we wanted to get that actual value reduction as an owner occupied residence, we would have to submit an affidavit stating that this is my primary residence out there. So there's some work on all of our end, and I think there was like 2.1 million units of owner-occupied property. So assessors hated this bill, and rightly so, because they're now having determining like owner-occupied in addition to property valuations out there. So that's some of the pieces. Everything I just shared with you, and actually there's some other, I forgot, this is actually a bill that wasn't initially included, but it's worth noting. It takes 3 days for a bill to become law. So we had a bill that was introduced on Saturday, and it was passed on Monday. Again, in May, final hours. So that's all it takes there. House Bill 1311. So also on Prop HH is kind of a key piece that for a 1 year only, again, I haven't said anything about Tabor yet, if you've noticed, like nothing about Tabor surplus or lines or refunds, is that for 1 year only, if people, again, if voters decide and pass Prop HH, everybody, regardless of income level, would get the same exact amount in terms of a refund check. So if you're a single filer, you get this amount. And again, that number keeps going up because of state revenue forecast. I can't tell you off the top of my head right now. And if you're basically, if you're a joint filer, you would get twice that amount. Currently, for our Tabor sort of refund mechanisms, there's an earned income tax credit. There's 6 tiers in terms of how it's applied, really to help direct more money into lower income families out there. So that's the intent, and that's what's currently on statutes. But for 1 year only, if Prop H passes, everyone gets the same amount, regardless of income level. So it was something that was thrown on, I think, to entice voters, and we'll see it in the blue book. But that's the piece. For us, I'm going to just share with this because I've heard a lot of talk from my coalition partners out there about the Tabor impact, that this is an attack on Tabor, and this is something around that. For us, that is not our lane. We're focusing on the real estate component, what it means for property owners out there. There are other groups that are going to make that argument and that fight out there. And that's something that I think we're just trying to distinguish. And we are looking at the litigation aspect as well in terms of single subject, because this could impact future referred measures from the legislature that go through a different process than the citizen initiation or citizen initiatives that have to go through a title board. So those are some of the things that we're waiting on. This is why we will not likely have a position until mid-August at the earliest, is because we're waiting for the dust to settle, and we're just trying to make sure we make an informed, data-driven decision as to this. Ballots don't get mailed out until October, and I'm sure all of you know, like, there's time to like get information out, which will happen. So again, if you're getting questions or people are concerned, things are in the works, but we do have time to kind of shape what this discussion looks like. So that is Senate Bill 303, which is the ballot. There is only, as of right now, I believe there's, again, don't quote me on this, but I want to say it out loud. There's one other referred measure, I think Prop II, that doesn't have anything to do with real estate. So I'm not even going to, I just know there's, I think, one other referred measure that is in a different sort of field or category that could be on the ballot. But we're waiting to see. I don't think any citizen initiatives are going to make in terms of submitting 125,000 signatures plus by August 7th, but we're going to wait until that date just to kind of see where things are at. I'm going to get into the current, but I just want to read. So one of the things I think it's really worth kind of highlighting here for all of you, as people are hearing a bunch of stuff around Prop HH, the ballot question. And I'm going to read you the ballot question word for word. It's not very long, but I think it's important because I do think my gut is telling me, without having any data behind it, is that people on face value are going to like this, especially after they just received their property valuations, which are astronomically high for most Coloradans out there that own property. Shall the state reduce property taxes for homes and businesses, including expanding property tax relief for seniors, and backfill counties, water districts, fire districts, ambulance and hospital districts, and other local governments and fund school districts by using a portion of the state surplus up to the Proposition HH cap as defined in this measure? That's it. You didn't say anything about Tabor. It was state surplus. There's nothing about Tabor and this and that. Like, again, I think there's going to be a lot. I think the initial support for this is going to be high. So I think that's something we're going to look at and just sort of figure out. All right, deep breath. I mean, well, I think this is a time, like, as we've got through bills, I got a couple more sections, but I'm seeing it's 2:40. So I'm happy to kind of dive into a question, or I can get into like what is happening now, because these next sections are pretty short. I'm going to keep moving. I'm not checking the chat. All right. So for everybody that is listening in still intently here, now is the time to make friends before you need them. So these are the things I'm asking you all to do because it will help all of us collectively come January of 2024. Every opportunity you have to engage with the legislator, please do so. You may not like your legislator. They may be of a different political persuasion than you, but I cannot share with you enough that, going back to when I said that one of the 100 legislators are a realtor, that is not stopping them from running legislation that impacts your business and your life. And this saying really does apply. We have it a lot of our RPAC. If real estate is your profession, then politics is your business. So I am asking you directly to engage with your legislator. So they have town halls, there's events, local chambers are doing a pretty good job about bringing in legislators out there. Every opportunity you have, please connect and talk with them about your experiences in the profession. We, as an association, are exploring policy concepts for possible 2024 legislation. We've got a list out there. We're looking at various different things. I don't want to share anything here because it very well could change in the next 5 minutes out there. But again, we're taking in sort of policy ideas and concepts and like, what are some things that we can go into 2024? So, typically, I would say the interim between legislative sessions is the calm before the storm. But if you've seen the news, 2 House Democrats just filed a lawsuit against their own party and the Republican Party for violating public meeting laws. So this is around using what has long been known as caucus meetings, and then using the app called Signal. If you haven't heard it, it's an encrypted application to communicate. Essentially, it's an encrypted text messaging system out there that messages disappear forever. It's encrypted. So it's a secure system out there. But again, I've used it. I've used it to communicate with folks in various tables that we've sat at. I know legislators use it, and that was one of the pieces of the lawsuit. But again, the longstanding practice for both parties is to caucus weekly and to have legislators provide briefing on bills to help caucus members understand them, and in coordinating bills before certain committees on certain days. This is a chance for everybody to hear why these bills are being heard on a Wednesday at 2 o'clock, because they're going to last until 2 in the morning, and why you shouldn't schedule something else early next. So there's some sequencing and coordination that goes on. But this could upend that entire sort of caucus dynamic. So it remains to be seen how this will affect the caucuses going into the 2024 legislative session. But it really could empower the legislative leaders in each party to make decisions without pulling together entire caucuses. So stay tuned. The fireworks are happening even after the 4th of July. 2024, so that's what's happening now, is that sort of key piece. I mentioned like getting involved in the LPC, finding opportunities to engage the legislator. We are going to do some candidate sort of campaign schools for CAR. We're hosting if people are thinking about running for office. I would encourage all of you. We have 0 right now. It'd be great to have 1 legislator under the dome, 1 realtor as a legislator to like push back on sharing that experience and like push back against all of these housing bills from folks who are not even operating in the profession. For 2024, this is like, we had a lot of success. I'm going to say this right now. 2023, we defeated quite a few things out there, knowing that you had 46 Democrats and 19 Republicans in the House and 23 Democrats and 12 Republicans in the Senate. Like those numbers out there should say some of these bills should have gone through and they didn't. So lot to sort of be thankful for. We expect boomerang legislation for 2024. And everyone asks what's boomerang? Like just like a boomerang, these are the legislation that comes back. Sometimes it comes back every single year. We had a bill around transfer fees attached to real estate transactions for affordable housing funds. Rent control, tenant landlord issues, land use, et cetera, are all coming back in 2024. So we've really got to keep increasing presence and communications out there because these are things that the opposition and folks that really wanted to see some of these things go through, they're not just resting, they're out there trying to actively organize. There's been a lot of media coverage around landlords. In fact, there's been another lawsuit around application fees being used and held onto. So the other group is working in terms of beating the drum, at least from an earned media standpoint on some of these issues. 2024 is an election year, and it's not a small election. It's a big election year with the president at the top of the ticket. So this could impact what some legislators carry. Sometimes we typically see in even years, legislators tend to play it a little more safe. But again, who knows? All bets are out the window. 2023 was a little bit chaotic. I expect 2024 to be chaotic as well. I am right at 2:45. That is all the stuff I wanted to share with all of you. So I am happy to take some questions and answer them the best I can in my now 4.5 months in the role. Chloe, is this the time that should I check the chat box? Is this the time I should check the chat? Or is there any questions there?
There are no questions in the chat box currently. Well done. And thank you again for your insight today.
Hey, happy to share. I hope everybody enjoyed. Like, it looks like I'm like in somebody's basement. Like I'm looking at my own screen here. It's like dark and mysterious. I think looks like there's wood paneling, which is actually curtains on the side here.
So we have a couple people that raised their hands. Let's see if we can allow them to talk. So first up is Lori Lee. Lori, if you can unmute.
Lori, you are live with us. And just on cue, I hope you can all hear the car alarm outside my door here.
Lori, are you able to unmute? Okay, let's try Susan Sechrist. Susan, if you'll unmute and ask your question, please.
Hello, good afternoon. Unless I'm confusing these two bills or whatever, can you briefly recap how Senate Bill 303 will affect or how it could affect the senior tax exemption? Or are these two different things I'm looking at?
Two different things. And I'll look, and Susan, I'm gonna make sure, like, here's one of the things I always like to double back and make sure, but this is around the homestead exemption out there. So
yes. So yes, I must be confusing the two.
And again, we'll have, Susan, not just for you, but for everyone, we're gonna have a detailed analysis of Proposition HH as we're kind of going through the Blue Book now, in terms of its impact, but we'll dive deeper in terms of the senior homesteaders. It's actually been called senior owner occupied.
Okay.
In terms of that piece out there. Okay.
Thank you.
You are welcome, Susan. Just writing some stuff down.
Okay, let's move on to Liz Benson.
Hi. So I don't know, because it didn't sound like, unless it was covered by the one about increased density. Some clients were asking me, they thought a law had passed that would prohibit height limits like the ones that Boulder has.
Yes, I can tell you that, again, 213 did not pass in terms of that. It is still, in terms of height restrictions, it is still a local control issue. The state has not weighed in terms of height restrictions. What was in 213 was that if there was a height restriction in place, that if you wanted to put on an ADU or again, this whole middle housing, that you couldn't apply a different standard to those units than what was currently enacted for, like, again, say a single family home. So it didn't touch on that piece out there, but from my understanding, it is a local control issue, and like there's nothing in state law that has changed that to prohibit a height restriction.
Okay, thank you.
Okay, Brian, there's a comment from Nora McIntyre. She says, wow, thank you for all the information you shared. Thanks to you and your team making amends and doing so many good things to impact legislation. Then I have a question from Susan Pierce asking, when will the radon piece be in the contract to buy and sell?
That's actually a really great question. And it's something that I need to actually double back with Scott Peterson on. I know that in the forms, the property disclosure forms, it's also, there's talk in terms of how that will look like on the form there. The key piece is none of these, in terms of when these bills are actually taking effect, it's 90 days after the last day of session out there. So this will be August. So the absolute earliest would be August 7th. But I think there might be some built-in time in terms of when we'll see that out there. So that's, I'm going to go back and just make sure, and we'll get information out specifically on when will we see a change in the contract to buy and sell with this new, again, new all bold, print of the dangers written within it, that piece. And then when will you also have to basically, for a seller, provide the CDPHA brochure and then the property disclosure. Those are the three things that came out of 206 that will impact folks. I think I just saw another question around something else. I saw it pop up and then it went away. Chloe, did you catch it? I guess I could open up the chat. Oh, impact on the second homeowners. This is, yes, again,
out of state.
Going to 303. So yes, all right. This is one of the things that is where folks are caught up. So again, you have a primary residence or owner occupied residence that would, again, all of these, and I should share, we amended part of this. So we fought for an amendment that would make it so that the assessment rate is the same for all of these properties. For the other residential or the second, third, additional properties that's not primary residences or owner occupied, they wanted to move their assessment rate back up to 7.15%. And we're like, no. Like, again, assessment rate is like really the thing that makes a difference. Everyone can do the math. The actual value reduction is really just a couple $100, at least in Denver, in terms of impact out there. It's the assessment rate that's really the meat in terms of value out there. So we fought to have it 6.7 across the board. So 6.7, again, got to take a step back. If Prop HH passes, 6.7% across the board out there, including for the other residential. For other residential, it does not distinguish whether the person who owns that property is in Colorado and they have a second, third, or fourth additional property that they rent out, which again, a lot of us, some of you, a lot of us know folks and have some additional properties that we rent out there, and we live in the state. Again, it's the same assessment rate. So whether you live in Colorado and have additional properties, you just wouldn't be able to get the actual value reduction of 50,000 or essentially 40,000 in 2025 and out. You would get the 50,000 for 2023, the 40,000 for 2024. It's starting in 2025 to 2032 where there wouldn't be an actual value reduction. So that's the piece. If Prop HH does not pass, then you don't have this new classification. You still just have residential, you've got senior, And then you've got your multifamily piece out there. And the assessment rate that's currently in statute, again, is 6.765%. So it's a little bit higher than the 6.7. And then the actual value reduction, I think, is 15,000 for 2023. So there's more out there. So that's what would happen if HH does not pass at the ballot this November, is the bills that got passed in the final days of last year, Senate Bill 238, would still be in play, is still actually currently what is happening, because you can't assume, the assessors can't bank on Prop HH passing. So they're working all of their stuff based upon what's currently in law. So, all right, so this is go to the seniors piece. All right, so here's this is another important piece around the senior owner occupied. If you are a senior who owns a second or third property, you're in the same boat as all the other residential out there. So much like the senior homestead, where you have to have an affidavit saying this is my home, and currently it's not portable, so there's a 10-year sort of timeout in terms of the homestead exemption. You could then take what would eventually be $140,000 actual reduction starting in 2025 for the seniors, in terms of senior owner occupied property, residential property out there. So I'm hoping, Jeff, that answers your question, because it's the most recent one I see. And then Susan, I'm going to get back and I want to make sure I provide a real good critical sort of timeline about when exactly the radon piece is going to be in the contract to buy and sell, property disclosure form, and when the CDPHE brochure on the dangers and hazards of radon in real estate, when all those things have to be tied together. And I apologize, I don't know off the top of my head. I've got so many things swirling right now. This is definitely one of the things where I want to have to double back.
Does anyone else have any other questions before we leave today? Okay, it's looking
I will
like
just share, if you do have questions that you remember right as soon as we end this sort of panel here, please reach out to myself or my team at CAR. Look, we're happy to kind of answer any questions out there, and we try to do our best to get within 24 to 48 hours. But again, the questions that you have, I can assure most of you, the question you have is probably shared by at least one or two other people, if not by hundreds. So it's one of those things where a lot of these questions help generate more widespread information dissemination, which actually helps us in the work that we do.
fantastic. Brian, thank you again so much. We appreciate your time today and knowledge with sharing with everyone that's in attendance. We have recorded this, so we will be sending out the link in case you want to review or share with associates. So once again, keep in mind that RPAC is a really good thing on behalf of us as homeowners, as well as real estate professionals. So please do support them financially.
Hey, Chloe, before we lose everybody, before folks, can everyone pull out your cell phone right now? This is something I feel bad, because Lauren would be kicking me right now if she saw me. But if folks can pull out their cell phones and open up your texting, your messaging application, whatever it is, and basically the number is 30644. So put that number in. You're like, oh, that's an interesting number. In the subject of your text message, just type in realtors. So it's plural. It can be all uppercase. It can be all lowercase. You can mix the cases. It doesn't matter. But yes, text 30644 and it's realtors. If you did it correctly, you should receive a message back from the Realtor Party mobile alerts. I really want to stress this. This is not something that, again, a lot of us get text messages during election season from people we don't know, but this is not it. This is not something that's going to be sold to anybody. It is strictly in-house, where we can send out calls for action, and you can receive a text and a link within that text to take calls for action from your phone immediately. We are very judicious in terms of how we use this. Right now, we sent out maybe one text per month during this last legislative session, and it was around rent control and taking a call for action on that piece. So just know you're not going to we're not selling your information. It is all in-house, but it's a chance for us to send you a call for action via text versus email inboxes, which at least for me, it's scrolling at some times of the year. That's it. That is officially all I have.
Fantastic. We really appreciate you, and thank you everyone that's attended today. We will be sending out that recording either tomorrow or the following day. So thank you so much on behalf of Heritage Title Company, and keep doing the right thing out there.
And thank you, Coy, for pinch hitting again. Adapt and overcome. It's a very political sort of line of adapt and overcome.
Indeed. Again, thank you so much.
Okay.
Have a great week, everyone.
Thank you.
Bye-bye.